Good morning, September 6th, 2019. Kirk Spano here. And we're going to talk about the climate, the hurricane, public policy, and then we're going to move into unemployment report because we know that that's important. And then we're going to take some questions and look at some charts and really think about, has anything really changed, or are we still on the path of a pretty big correction next year? And what really is going on with socialists? I'm probably going to go off on them at some point. In any case, I read a book years ago, 7, 8, 9, 10 years ago, I don't know how long, called Storms of My Grandchildren. And it was written by a professor who worked at NASA named James Hansen. He has been warning us about climate change for a very long time, several decades. A lot of the things that are happening today, he's predicted decades in advance. The problem with climate change is that everything is seen in the scope of today or our recent past. And that is not atypical of human beings. We look at our investments with recency bias. We look at our relationships with recency bias. We look at almost everything with recency bias. We take a look at things based on what has just happened or what has happened in the not too distant past, and we apply that to our being today and our belief structure and how we rationalize. So in a big topic like climate change, something that spans hundreds of thousands of years of scientific measurement that we have done now, we need to, I think, get away from the ideology and ask ourselves a couple of fundamental questions. And I think the first question would be something that all of our grandfathers would be proud of us for asking is, if there's a possibility that we're causing or making worse climate change, would it be smart to refrain from doing those things that we do that are causing an impact? In other words, should we be taking the better safe than sorry approach? If you're Native American or indigenous almost anywhere, in a tribal sort of way, there's probably a belief structure of try to leave the smallest footprint possible. And with carbon, the same thing could apply. Do we want to leave a very small carbon footprint so that we have very little to no impact? And I think the resounding answer should be yes. Why would we do things that potentially could damage the planet? Now, I understand that the argument I'm going to get back when I say that is, well, we needed fossil fuels for the last couple of hundred years because we didn't have an alternative to improving our standard of living. I agree with that. I've been an oil investor for a very long time. For the first 20 years that I invested in oil, I made a lot of money. In the last couple of years, I have not. So I have thought about where are we in this history of using fossil fuels, and it becomes pretty apparent to me that we have in fact entered the end game for fossil fuels. Now, how long does the end game last? I don't know. A decade, 3 decades, somewhere in there, 10 to 30 years. And the problem with it taking so long is that we don't typically look out 10 or 20 or 30 years. We just don't do it. When we're kids in school, most kids are like, oh, I got to go to school. I'd rather be out playing ball, or I guess today playing virtual ball. And we grow up and we think about, okay, the next 5 years, do I want to get married and have kids? The next 10 years. And eventually, sometime in our 40s, most people start thinking about retirement. And we're never really looking all that far out into the future. And with the climate, with anything that has to do with the whole planet, we need to. Because it moves slower than we die off. And so while we have maybe 100-year life expectancies if we take care of ourselves and live relatively clean and get the right implants, and become cyborgs at some point, the planet's going to be around a very long time. The question becomes, will it be habitable? Probably by cockroaches forever. But will it be habitable by humans forever? Probably not. But we'd like to put that day off as long as possible. So we should take the time to try to understand this from the long-term point of view. Now that I'm having my first grandchild in December, I would like to think that by the time he's 30 or 40, he's not terrified of having children, because he's worried that the planet won't sustain them anymore. So in any case, I have this book up because if you read this today, 10 years, 12 years after it was published, something like that, I think you'll be astounded at how many of the things he said have come true since. So right now, everybody's watching Hurricane Dorian, and it is a big storm. So big, in fact, that the president couldn't even recall ever a hurricane Category 5 storm. So how do we feel about this sort of a storm? On one hand, they've happened before. On another hand, scientists around the world have been measuring the frequency and the severity of storms going back over a century now. And we have really good records going back to the middle of the last century. So we're talking 70, 80 years of really good records. And what they have determined is that the storms are becoming more frequent and more severe. And it's a pretty, I didn't pull the graph up. I should have, because I've seen it. It's a pretty convincing from the lower left-hand quadrant to the upper right-hand quadrant sort of chart, right? If it were an investment, we'd want to be invested in hurricanes because they're a pretty good investment. They've done well. The chart has gone up and to the right. So what should we expect in coming decades? Well, if we continue to put stress on the planet's atmosphere, which is what we're doing, and we've known this for a very long time, probably that chart keeps going up and to the right. At what point do a lot of these things come to a head? I don't know, 10 years from now, 20 years from now, 30 years from now, you've got me. I think largely nature is unpredictable, and I think much like in poker and investments, you can suddenly find yourself in a position where you can lose a lot. Unfortunately, you can't fold your cards here, and you can't take your investment money out and wait for a better day. If we get to a tipping point with the environment, we're in big trouble. One of the reasons I've suggested buying Great Lakes real estate is because it's one of the better places in the country to have resources and have some stability of climate. So you can take that for what it's worth, but in the very long term, there are certain things that you probably don't want to do anymore. You probably don't want to buy Key West real estate. I say that having just been there, and I'll tell you, there's a lot of low-lying land in the Keys, to the point where they've built the new bridge. I wonder if some of the destruction that I saw from the hurricane a few years ago ever gets repaired. We can ask about Hurricane Katrina. There's parts of New Orleans never going to get repaired. Why? Too low line, too much risk, and people necessarily have to move inland or to Houston. A lot of folks from New Orleans moved over to Houston. So I think at a minimum, we should take this topic seriously. We should understand that it does have an investment impact because governments and corporations around the world are changing policy and approach. And that's just a fact. So with any investment theme, even those tinged with politics, we need to take a look at what is the big money doing and what is happening among the people who make the rules, the people who drive the system, because that will impact our investments. In the debate last night, Kamala Harris pointed out that there really are some insane things going on in the Congress. One is that she said we had to spend a day, I kid you not, in our United States Congress. I was part of a committee hearing which the underlying premise of the hearing was to debate whether science should be the basis of public policy. Think that through. Where have we come in a country where religion and politics are supposed to be separate? That and to expand on this, this is part of the whole debate of whether or not to teach creationism in schools. Where have we come as a country with separation of church and state, where we put religion, which is a belief structure with nothing that can prove or disprove it, up against science? You know, it is a complete departure from what the founding fathers wanted, which was religion in the home, but sense and science in government. I would suggest taking a look at this New York Times article. The one thing that I will just mention is that there was pretty broad agreement to not have drilling for fossil fuels on public lands. I've told you that that would happen at some point if the Democrats got into office, that would actually be good for fossil fuel companies. Why? In the short run, it creates some supply pressure, correct? So the companies that aren't very dependent on public lands and have production would do pretty well. So we've picked out about a half a dozen of those companies. And when I pick out Encana or Occidental or Pioneer as our last fossil fuel investments, it's because I believe that those companies in the Permian Basin will benefit as we go through the stages of the end of the fossil fuel age. So while we have taken a bath on these oil investments, and we're going to actually take a look at something here in a second about that, there's probably upside. And for those of you who haven't bought Occidental or Pioneer or Encana or Parsley at this point, you're getting in at a way better price than I did, maybe half. You probably ought to take a look at it. And again, I will tell you, I expect some of these companies to go private. We've already seen one oil company go private, and Harold Hamm has talked about it with regard to Continental. I think that the profits generated by these companies are going to be so big in the next decade, in the 2020s, that if the executives and private equity, which is clearly snooping around, can take these companies private, they will. Now, does that mean that they'll get back to their high prices? No. They'll get a premium to today's price, but they're never going to get back to their highs unless they stay public. And if they stay public, what they will need to do is just buy back shares hand over fist. And that's clearly one avenue. Most of these companies have declared dividends in the last year. So now that they have dividends, they have to decide how are they going to return cash to shareholders. I would suggest to most of them, buy back as many shares as possible once they've established a 2 or 3% dividend, and let the dividend grow by reducing the shares outstanding, not by adding to the dividend. Why? Because companies buying back their shares in the fossil fuel space may be the biggest source of demand for those shares. So in an era where 350.org is instigating divestment, and really what they're instigating is socialism, and I'll show you that, share buybacks are important. So when we look to invest in these companies, we have to ask a very fundamental math question. Will they be able to buy back enough shares to make that share price go up, make that dividend yield even more attractive? And the answer is probably yes in the case of the Permian companies, especially the more pure play Permian companies, because in Colorado, they're going to keep running into headwinds. And I suspect, though I don't know this, I suspect Oklahoma is going to become a bigger problem in the future because they're having a hard time with the seismic activity. So that leaves companies in the Bakken, the Powder River Basin, and in Texas as the companies that you want to be most invested in. So stack scoop players, I'm not so sure I want them on my A list anymore. They're doing okay, and Oklahoma is very friendly to fossil fuels because they need the money for their economy, but there's going to be limits. And the same limits are even stricter in Colorado and going to continue to get more strict. I still believe that Colorado will probably slap a ban on most oil and gas drilling here sometime in the next several years. So we'll see if that continues to develop in that direction. In any case, there wasn't a lot of really big agreement in this climate change town hall, not a debate. They should have made it a 2-hour debate. But one thing I'll tell you is that I don't think that the middle of the road candidates are getting it. There is a huge support for climate change policy. You're talking somewhere around 70% of the population thinks that we need to have better climate change policy. So the fact that the party and Joe Biden are shying away from talking about it tells me that they just have a hard time talking about it. Beto O'Rourke talks about a cap and trade idea for carbon emissions. Here's what I will tell you. The hedge fund guys and the traders, they're the ones that get rich on that. I don't think Beto O'Rourke is smart enough to know that. I really just don't think this guy is a brainchild. And you all know that I lean a little left to center. But, you know, in this case, the problem with cap and trade is it's complex. It doesn't have direct impact on things in a way that the common person understands or can feel. They just get the negative end of it. In my opinion, a very simple carbon tax, maybe adding $1 to the gasoline tax, something simple, something that has impact, something where the financial industry can't stick their greedy little fingers into it. This camp that I go to in New Hampshire every year, Camp Quinnibarge, is owned by a guy who made a bunch of money trading carbon in Europe. And he set up a philanthropical thing, and he's done good things, even though he's raised the price of our cabins quite a bit because now it's called an eco camp. I think he's a good guy, but should he have made all that money that way? I don't know. I think simpler is better, and a carbon tax is probably just the way to go. And that money should be directed into your Green New Deal, basically rebuilding the power grid, because if we rebuild the power grid and we make it coal-free, we solve a lot of problems. So simplicity in all of these things seems to work. We don't need to socialize the utilities, which is an idea that's out there. We don't need to mandate behaviors because the markets will generally take care of things if you tip the scale just a little bit. right? Water runs downhill. So simplicity in all these ideas, I think, is a big deal. Got to bring God into it. So take a look at this. The one candidate I keep becoming more and more impressed with is Elizabeth Warren. I think she's the smartest kid in the room. I think she's the one that everybody, they all look over her shoulders and they try to copy her where she can. I was that kid in certain classes where people want to know, hey, well, what's the answer to that math question? And, at some point, maybe we really ought to just go with the smartest person and see what happens. I think that she's probably the smartest, and she is in no way a socialist. She is very free market, but let's tax and regulate in smart ways. Here's an article that either I found or somebody in the chat room found. Stopping climate change will be easier and cheaper than Democrats think. Well, you've heard me talk about this in the past. If we get rid of coal and we put a tax on gasoline, all of a sudden we basically solve about 1/3 of the carbon footprint problem overnight, quickly, very quickly. And it ends up becoming 2/3 as the gasoline-powered cars go away. So while everybody wants to have a big philosophical, ideological argument, everybody wants to say something that gets them elected. The reality is that there was a study, and I've been saying this, I don't know why I took a study, is if we just get rid of coal in the power grid, and we go to and replace coal with alternatives, which we can do now because economically it makes sense anyway, right? It's cheaper to run solar with batteries and wind with batteries now than it is to build and clean up after a coal-fired power plant. And in fact, coal-fired power plants, as we've discussed, are starting to get torn down because the utilities are just making an economic decision saying, hey, in Indiana, we're going to tear down a coal-fired power plant because it's cheaper for us to slap up wind and solar with some batteries. So the math, the economics, is actually in favor of alternatives now. If you watch the battles going on with regard to this Indiana power plant that they want to tear down, the coal plant, and you realize that there's political interests trying to prevent the coal-fired power plant from getting torn down, it should smack you in the head that it's all about politics. Because left to themselves, the utility would tear it down. Because why? They're going to save, I think it was $10 million a year with the solar and the wind. Who benefits from that? All the people getting electricity from that utility. And they're not an isolated case. This is starting to happen all over the country. So if we just focus on getting rid of coal and giving a nudge to the automotive industry to go hybrid and EV with a gasoline tax, everything probably works out. We don't need to get rid of our farting cows. Why? Because some of us like steaks and burgers. I realize that I shouldn't eat as much of it as I probably do. And actually, I don't. I take that back. I only have meat pretty much every other day. I don't have meat every day. But that's a prostate decision, not a get rid of some of the methane decision. At least the cow methane. Oh, I think I got rid of something I wanted. When I say that it's all about politics, take a look at this Wall Street Journal article from today, I think. It might have been yesterday. The Justice Department launched an antitrust probe into Ford. Well, actually, Ford is in there. Ford, Honda, BMW, and VW. Why? Because they decided they were going to use stricter emissions controls than what the Trump administration required. How the hell is that antitrust? They're making a business decision that, hey, looking out forward, it's probably better for our businesses if we have tighter emission controls. Might not be of any consequence today, but if we want to stay in business, we probably ought to be tighter on our emissions than the rollbacks that the Trump administration did, which were frankly stupid rollbacks. The technology was already there for better emissions, and it doesn't cost anything really at this point. So, talk about political tools. The Justice Department is being weaponized against some of the stuff that Trump doesn't believe in or is beholden to. I don't even understand the logic behind what they're doing here. I just like that picture. So there's websites out there. This one, Climate and Capitalism. It's a bunch of socialists who think that almost everything should be nationalized because somehow they're smart enough to know what we should be doing. Do they believe in the expression of freedom, free ideas? No, I actually think this website might be backed by Russia. Look at this. Comments policy. Climate and capitalism is expressly left-wing. Eco-socialists. And discussions here will reflect that. Comments that defend or promote anti-socialist or pro-capitalist views are not appropriate. Please take such arguments elsewhere. And they go on to say that those will be taken down and you'll be banned. Organizations like this are full of shit. These are one of two types of people, maybe three. We'll just put stupid in one category. Okay, so you got your stupid. And then you've got your pretty boys and your people who are all hepped up, younger people usually. It's that guy in college who talked about things in kind of a nonsensical, looking up at the ceiling kind of way, and it impressed some girl. It's that guy. You know which guy I'm talking about. It's the guy that you listen to and go, wow, you're really pretty full of shit, but it's somehow getting you laid. All right, I get it. And then you've got your hardcore take away everybody else's freedom because I don't know how anything really works, but this gives me power. You got that group too. I don't know which kind of group this is. I don't know if this is the kind of pretend utopia, make me popular today group, or is this some sort of subversive movement? I don't know. But the fact that they come right out and say, we don't want to hear your pro-argument, capitalist arguments, whatever. They're using a website and science and technology created by capitalists. Period. They're using capitalism to promote socialism. Why? Because socialism always goes broke. And people live in misery. So while there is a fine line that we have to walk between smart regulation and taxation, clearly you can go too far to the right. These ideas that some young people are buying into, and maybe some old hippies too, need to be fought back on. And that's why I don't like AOC, right? I think Alexandria Ocasio-Cortez is dangerous for the country. Anybody can point out problems. But when the solutions are take control at the government level and limit people's freedom, you know what? Go find somebody else to help me find the problems. Bernie's really good at finding the problems. And he's kind of a weird Chinese type of socialist capitalist. I can't figure Bernie out. But most of his answers hit the nail on the head when it comes to who's screwing who. But then when he tries to fix it, he just goes off in the wrong direction half the time. Now, I think he's right on Medicare for all, but maybe Biden's public option makes sense too. I don't know. But at some level, we cannot let these socialists who haven't read, the general theory of employment, interest, and money by Keynes. They haven't read Hayek. They haven't read Schumpeter. They haven't read any of these economists. They don't know what they're talking about. They just don't. So if you get a chance in the next year to talk to any young person who is spouting socialism, prepare yourself and then blast them because they're dumb. And I'm not so sure that convincing them is going to work I think actually you need to do to them what they want to do to you. Just tell them to shut up. In any case, just a quick take. I watched Joe Biden on Colbert the other night, and gotta say, I think he's a great guy. I do. I think he's a good guy. But I think he's too tied in. I think that he's probably too old. I don't think that he necessarily has the energy level to be the president. And I think that, frankly, I think President Trump at this point is wearing out. I take a look at the Democratic field, and there are some impressive people. Buttigieg, I have a hard time saying his name, even though he's a Midwestern guy too. He's smart. Cory Booker is smart. I think it's weird because he's a vegan. Vegans, I just think, are weird. A good kind of weird. I know a vegan, and she's awesome. But my meat-eating self, I just think veganism is a little weird. I get it, just think it's weird. And that's really my biggest argument against Cory Booker. I think he's a smart guy. Kamala Harris, man, I could see her as Senate Majority Leader. I could see her as Attorney General. I might even be able to see her as Vice President. She's pretty smart too. In her experience in Congress, I think some of the things that she said about it makes you go, wow, she gets it. Bernie, too old, too far to the left. He's the guy that we should just leave in New Hampshire to scream a lot. I tell you what, if you're in Iowa, you're in New Hampshire, I would be getting behind Elizabeth Warren if I were you. She's the one who can plow through a lot of things that are out there. Smart taxer, smart regulator, completely free market capitalism, as much as you can have. And she believes in building from the bottom up, not the top down. So I think that that's important. And we are talking about investing. All of these things impact what's going to happen to your portfolio. And if you don't understand that yet, then you're not paying attention. Because some of the things that President Trump has done have screwed us. And they're going to continue to screw us. So let's move into that then. I talked about those capitalism needs saving from itself. Smart taxation and regulation, that's all it takes. Speaking of smart taxation and regulation, we are seeing a major overhaul potentially of Fannie Mae and Freddie Mac. I agree that needs to happen. But if you take a look at what's getting proposed right now, it is by, for, and of the big landlords and the big real estate investors. It's not for mom, pa, and the 98% of us. So, again, there's a fundamental difference between building from the bottom up and from the top down. The folks at the top don't need the helping hand. They don't need regulation in their favor. They don't need taxation in their favor. They just need a shot. So when you read this, if you read it, understand that what they are proposing in here will result in making it very hard for people to buy real estate, to have a home. More people will become renters. and we'll be subject to bigger and bigger real estate bubbles and the corresponding crashes that come with that. You need to understand that. We got the jobs report today. What have I told you is going to be the harbinger of whether or not we get that mini recession next year or skip straight recession that I've talked about? It's going to be jobs. So the jobs reports, we're getting lower and lower job numbers here. I wish this would get bigger. You see the hiring by month has been going down for about a year and a half now. So we look like we're probably going to do our best to hold this line. But if this line starts to go up and this line turns red, we're in trouble. So that will tell us if this kind of drifts up, starts getting a little higher again, doesn't have to get a lot higher, just a little higher, and this stays steady, we're okay. This starts to drift up, this goes red, we start losing jobs, we get the recession. Again, I'm not seeing a financial crisis coming, not just yet, but I do think a mini recession, or as I've defined it, a skip straight recession makes a lot of sense. Where we have a couple of bad quarters, they may just not necessarily be back to back. We did just get GDP numbers, and it looks like the next quarter is going to be pretty weak, well under 2%, probably closer to 1%. Why is that? It's because the trade war really isn't winnable, right? We know that. We should know that by now. Again, being against what the policy is or thinking the policy is bad doesn't mean that somebody doesn't think that China should be stood up to. It just means that there probably was a different approach. And I was watching Fox the other day because they've seemed to be more fair and balanced lately. They have pointed out that maybe we would have been better off confronting China with a bunch of allies than trying to go it alone. I think that's pretty apparent at this point. They did schedule, I believe, tentatively scheduled talks in October. What did I say 7, 8, 9 months ago? The Chinese are just going to stretch this out. What incentive do the Chinese have to cut a deal anymore? Unless they get what they want. None. We're a year away from an election. If the Chinese don't get what they want in the next couple of months, they'll just be like, well, okay, damage is done. Let's make sure that the American economy does get that mini recession or skip straight recession, and then we can negotiate with somebody new. What will be the impact from the Fed? Interest rates will get pushed down even more. You've heard the phrase pushing on a string? Well, we're going to try to push on that string even more. And when we push on a string, that does create asset bubbles. So we might get that end of QT rally that I've talked about. In the last month, we've had a lot of choppiness, up 400 points one day, down 500 or 600 points the other day. Just been chopping around and can't break through the resistance. Eventually, there will be a breakthrough, and it'll be a breakdown to new lows, short-term lows, or it will be a rally. Most of the technical analysts I follow seem to be leaning towards, probably going to, retrace at least halfway, give or take halfway to the December lows. I think there's a pretty good chance we get back to the December lows and do a complete round trip. If we do a round trip, that's probably a good time to invest, unless the economic data is coming in weaker at that point. If the economic data is coming in weaker at that point, because the trade war can't be won, or because public policy gets steered towards fewer and fewer people's benefit, or just because the CEOs are uncertain, so they sit on their wallets, or they sit on their corporate wallets. One of the Fed presidents, Ballard maybe, I forget who it was, said right now the economy is running basically 100% on consumers, meaning that the 1/3 of the economy that is normally business spending has gone away. So consumers, I think, blew their wad this summer, and they'll borrow for Christmas. But going into next year, consumers are going to have to retrench because the money just isn't there to support the consumption needed to replace business spending. Doesn't mean that there'll be a crash in consumer spending. It just means that the peak, the extra spending that's been going on, will disappear. And that'll create, at the margins, a huge void in the economy. That'll probably cause an uptick in unemployment. And then that is what will hurt the investment markets and pop some of these bubbles. Now, I know Jesse Colombo a bit, and he talks about bubbles, the bubble guy, all over the world. He doesn't quite understand what he's talking about. He's very self-assured about what he's talking about, but he doesn't understand the economics. He's not an economist. But he gets something at a fundamental level. And what he understands is that if you keep pumping money into something and there's not organic growth, eventually, when the money stops getting pumped in, you get a retrenchment. And we are seeing mini bubbles, not gigantic bubbles, but mini bubbles all over the place. President Trump would like to inflate the hell out of those, right? That's why he wants the Federal Reserve to lower interest rates, the whole point. From an economic health standpoint, that's a bad idea. There needs to be a more organic approach to economic development. And if we keep pumping and pumping and pumping, eventually these overvaluations become dangerous bubbles. We're not there yet, but it wouldn't take but a large step or two to get there. So we need to keep an eye on that. Oh, Robert Mugabe is dead. That's good. 3 decades too late, 4 decades too late. So let's talk about specific investments for 10 minutes. Who wants to talk about something specific? What's out there that you want to talk about? Okay, Mr. Bear, what do you want to talk about? We have some folks here who have some ideas, so we'll just make this question and answer. Take a look at the 3-year chart here. So from this peak in early 2018, this is the volatility trade we made, and we made all kinds of money. The fall off in December, then the rebound. What do you see here? Right, it's kind of a box. Shopping around a box. It's a wide range. But this is gone. Right? That uptrend is gone. Choppiness. Now, do we keep touching new highs here and there? Yep. Will we touch another new high? Maybe. Hard to know. At some point, this either breaks up or breaks down. If it breaks down and we have weak economic data, it probably goes pretty far down. I have on a whiteboard here some numbers, and one of those numbers is 210, 212, 5-year chart. This level right here. The S&P 500 could clearly get down to about here. I said 220, 230. Maybe we don't quite get to here. But take a look at this support level. Huge support. Right about there. So if the economic numbers get bad, you should look at this. You go down in waves, right? Because you always get those little rallies. This is an area that we could get to. At 70 points. Yeah, that's a solid, almost 30% drop, right? Now, we could also break up, blow that bubble. Ave and several others, including myself, 2-3 years ago, said 3,600 on the S&P makes a lot of sense. But if you're that high, it might even go to 4,000. So, we could see a 25-30% rally yet. All right. Speaking of bubbles, your thoughts on passive investment bubbles. Okay, so Michael Burry, Dr. Michael Burry, one of the guys from The Big Short, he basically said what I've said. He said, look, if there's bad economic news and people start to sell, think about how this fire could get lit. You have 60-ish% of money today going into passive investments. It's that big. It's over half. And stock pickers are getting pushed out. And that's fine. A lot of stock pickers weren't worth what the mutual funds paid them. If unemployment goes up and people lose their jobs, many of them will cash in their 401ks. That means that all those funds have to sell. When those funds sell, they have to sell all of the stocks underlying those funds. It creates a self-perpetuating cycle. If fear overtakes the market and people start dumping their investments, that is a lot of selling very quick. The question you have to ask is, if the market drops 10% or 20%, will people in the face of bad economic news also sell? If they do, you get a spiral down. Now, what if your millennial investor shrugs their shoulders and just says, 20-30% is volatility. I'll just invest more. Then maybe it doesn't get so bad. But I know this, baby boomer investments will run for the hills. Any volatility in a baby boomer portfolio right now is met with the type of emotions that defeat what they're really trying to achieve and undermine the fact that they're going to need this money for 30 or 40 years because they're all living to 100. So how far can it go down? Well, with how easy it is to sell now, and with nobody holding anybody's hand anymore, the financial advisors, the benefit of them is that they would talk people out of selling. And that's largely gone away in the do-it-yourself investing environment. So the risk is that we get that big spiral down because it's so easy to sell. And if people get scared, they'll sell it down. Now, short of a financial crisis, I think that this is about as far down as we go. There is another level down, way down here. We could erase an entire decade of gains, right? We could go all the way back down here. S&P 500 at about 100. It could happen. We could lose 60-70%. I think it would take a major financial crisis for that to happen. We'd have to see so much fear that people just sold everything. I think that this level here, because of all the money creation, is the real target right in here. How likely is that to happen? I don't know. Fourth quarter was pretty bad. We stopped there. Maybe that's where we stop the next time. 250-ish on the SPY, 2,500 on the S&P, rather than going all the way down towards 210-ish. Where do I think oil is by the year end? Hold on. Let me polish off my crystal ball. Let me go get my 10-sided die. Oil will be $62.50 at the end of the year. I had no goddamn idea. If there's no conflict in the Middle East, oil stays in this range. Maybe drifts to the higher end, but probably doesn't change a whole lot from what I can tell. So that being said, that means we're going to get a huge move in one direction or the other, probably, right? Forecasting oil right now is incredibly difficult because we have to try to divine what the policy is going to be in Saudi Arabia and what our executive leadership in the United States is going to do with their production. Investors need to keep putting pressure on companies, oil companies in America, to return shareholder capital. Don't expand production, return shareholder capital. If they do that religiously, then oil drifts higher. If there's a conflict in the Middle East, which could happen next week, the Israelis, specifically Netanyahu, there's a lot of reason why he'd want to have a conflict next week, right? What's going on in Israel next week? Yeah, I believe it's next week. It's coming up, right? They have an election coming up. And Netanyahu wants to remain prime minister and minister of defense. We'll see. I'm surprised that in the last year we haven't seen more conflict in the Middle East. We'll see. Apparently, the Israelis have run hundreds of sorties over Syria and now into Iraq, attacking Iranian positions. Iran has been employing drones to attack oil infrastructure, as well as Israel, through proxies like Hezbollah and the Houthi. We'll see what happens there. But oil, I think drifts higher in the 2020s. I can't tell you what it's going to do in the next year or so. If Saudi Arabia would say, hey, we're going to start pumping 11 million barrels a day come May, going into summer, that could shock the system. I think it's what they should do. And maybe they would do that to keep the price of oil down for the election. And that would be bad for the oil companies and the oil stocks and oil in general. And it'd all be bearish. We'll see. How does this impact renewable investments? The cost curves for renewables, solar in particular, and batteries are all in their favor. You're never, ever going to see fossil fuels be the cheaper alternative ever again. Now that they're basically on par, the fossil fuels will probably drift more expensive, right? Because they can get regulated and taxed. And solar and batteries getting cheaper and cheaper over time. I mean, that's clearly the future. So we've talked about end phase. Where's end phase today? End phase is up a couple cents. Take a look at it over the last 3 months, 6 months. We can see that they may be, remember I told you they probably fill this gap? It's almost there. About $21. It gets down to about $21, it's filled the gap. And I'd probably be an enthusiastic buyer at around $21. I think 20 to 21 is what we put for the first support level. I don't think it'll fill this gap. It's been too long. Something bad would have to happen to the business. But this might have been a little overstating how good their business is becoming. Timelines change. People get tired of waiting. So I think that this gap will get filled. And then we have to take a look at buying end phase. There's several others like this. Is TLT still a good risk reward? I don't think so. I think that if you were in TLT the past year, 9 months, whatever it was, you did great. But I think that TLT at this point, you're trying to squeeze the last couple drops out of the lime, or out of the fruit that you have in your drink. I think solar is the place to be. Somebody asked about what sectors of alternative energy. Anything related to smart grid that we've talked about, solar, batteries, all these things, is where we want to be. Somebody says an extra 20% in quantitative. Hey, Mr. Dube, can you explain that? I'm not sure what I'm lost my spot. So, Mr. Dube, tell me what that comment means. Any chance for nuclear to reduce CO2? Yeah, theoretically. Could we get the small generators? We could. But I don't think we're anywhere close to that. I don't know that we're within 20 years of having the nuclear technology that we need, right? Be basically without waste. You need nuclear material so small at the end of the physical process that there's no real waste, right? The theory is that you could throw it into a swimming pool and that would be adequate shielding. We're not anywhere close to that. We're still getting too much nuclear waste, and nobody wants a big nuclear power plant near where they live. And frankly, from an economic standpoint, they don't make sense. There's this idea out there that solar can't power everything. Baloney. It's such a dumb argument. They've shown that if they build a solar power plant in Western Africa and run a couple cables to Europe, they can power basically all of France. They're already planning to replace the nuclear power in France. The future is solar, and the materials are there. The thin film, is so good and becoming so good, and we don't need cadmium for everything. They're getting to the point where they're able to do this without toxicity, and that's the hurdle. If they can do solar with batteries without all the toxic materials, it just becomes a no-brainer. That technology is closer than the small nuclear power plants. Oh, I see. Right. So, Mr. Dube got this right. So, 60% of the money is going into passive investments. And there's another 20% that basically is quant, right? That's the algorithms. So if there's a downdraft and the quantitative machines start pushing everything down and people panic and then they follow and pile on, right, you could get, an awful lot of selling. And then the market just opens 1,000 points down, right? And then the way the circuit breakers work, we could conceivably lose 10% per day for a week. I don't think it will happen, but I've talked about the 20 to 40% down week, haven't I? Haven't in a while, but we could see a 20 to 40% down 2-week period. You could see a correction occur in just 2 weeks. Now, it would have to coincide with something scaring the hell out of people, right? What could that be? Right? Buckminster Fuller talked about the global grid. Okay, solar ETF. TAN is okay. I criticized TAN 4 or 5 years ago. I had specific criticisms. that I sent to them as well. And they've changed the makeup of tan. So if you take a look at what's in tan now, it's a lot less Chinese, right? Solar Edge, First Solar, Enphase, SunPower, 4 of their top 5 holdings. Those are the 4 companies that I talk about, right? We should probably talk about Sunrun a little bit more. Terraform is from the old, I can't remember what they're called anymore. The company that went bankrupt. I made a ton of money on them. I can't remember what they're called right now. So this is a lot more American than it used to be, and that's good. But it still has that Chinese component. This is Europe, I believe. So I think tan is pretty good if you want something that's specifically solar. So if you don't want to pick out, if you don't want to just own 4 solar stocks, if you'd rather just have the basket, and you want that to be 8, 10, 12% of your portfolio, it's very rare that you go past that range. I did it with oil and see what it got me. But these are, if you'd rather have the basket than building your own little mini basket of 4 or 5 stocks, that's fine. You probably have a little bit less upside and a little less downside. And if you like the narrower range, go for it. So this could be a proxy for these. Now, here's the thing. These don't all move at the same time. So I'd rather buy Enphase at 21. Remember, we bought SunPower at 6. And then you've got, Solar Edge that we got into and got out of a few years ago. Should have held it. First Solar, we're not in right now. So I'd rather trade these a little bit. But once you own some of these, you probably hold them a very long time. PayPal. Somebody mentioned PayPal somewhere. Should PayPal worry about GPN? GPN, is that are you talking regular? Oh, global payment? No. I'm not too worried about these guys. Different businesses. I don't know enough about global payments. I take a look at this chart and I go, okay, so what's the price to book? A little bit high. Revenue growth is only 12%. I don't know if this is justified or not because I don't know the business. So we'd have to figure that out. But I do know that they're different enough from PayPal that I don't, I'm not going to change my websites and the app on my phone from PayPal, right? And the blockchain technology that's coming, PayPal is going to be a part of. So, do they just operate in different segments, different parts of the world? Maybe that's the case. But I think PayPal is very solid. PayPal's been stalling out. Slow. It's a slower grind, right? I bought PayPal at the IPO, and I've traded it in the last year a little bit, but generally it's a holding. I think PayPal keeps drifting up and up and up and up and up. I could see them get involved with an online bank. There's a lot of things that they could do with their connections. So here's the thing with FSLR. Jump back to solar. This has been a good stock to trade. I do think that if we get a downturn next year, it comes back into the upper 40s. And that's where you back up the truck. Now, if you're truly a long-term investor, you don't really need to do anything other than trim a little, add a little, trim a little, add a little, right? So up here, you would have trimmed a little. Down here, you would have added it back. I'm not saying the whole position. Part of your position, maybe a quarter or half of your position. Sell it, buy it back. Here, I'd probably hold on for now and look for a little rally into the end of the year and then trim it again, maybe by January. But, you don't know. It should break out higher at some point, but maybe it hits this level one more time, pulls back, and then zooms up. In my mind, I visualize this drifting up, pulling back, and then in the 2020s, it's a rocket ship. Now, if you don't want to have to trade it, just hold it. Be a long-term investor. If you miss 10% trades in either direction, but this stock is 200 in 7 or 8 years, will you care? I've talked about don't get too enamored with trading in the middle of the market unless you're a really good technical trader. So this is something I think you can hold. Just put it in the box, and 5, 6, 7 years from now, you'll go, look, that made about double what the market made. You can try to trade it and do even better, but what's your risk? Yeah, everything looks good with the pregnancy. Well, where are we at now? It's September, October, November. So she's just entering or about to enter the 3rd trimester. She's been a little crabby and tired lately, but she's still running her business and making all kinds of money doing, my daughter's an esthetician, and so we're done with the investment part of the show if you'd like to go away. My daughter's an esthetician, and she's got some pretty good media and social media exposure. She's good at what she does, and she actually repairs the microblading mistakes that other people do. So when women go out to get their eyebrows microbladed, a lot of times some of these women or some of the people who do it aren't very good. So they end up coming to my daughter to fix it. And we're talking about she should market that. Because one, she says, hey, if you've had a bad microblading experience, come to me and I'll fix it. And that basically says, well, maybe I should just go to her first. So she's really good at it. And she's, as much as I want her to finish college, just because I think the business degree and broader experience would be great for her, she's going to have to do it on her own time when she feels like she can do it. When she understands better that it's worth the price. It's worth it to spend $10,000 to go to UWM, UW Milwaukee. It's just a great bargain. She's going to be alive, live to be 100-ish. Education can't hurt. So that's the only thing I worry about with her is that she gets stuck running in place. She's got executive qualities. I mean, literally, my daughter has executive qualities. My son, he is a sharp kid too, but he hasn't found the thing that's going to motivate him yet. He's trying to get into show business a bit, doing mentalism and a little bit of magic. He could be really good at it. People gravitate towards him. So we'll see. They're both doing good. Grandpa, on the other hand, man, Grandpa's terrified, right? Grandpa's got the kids, got a grandkid coming, trying to run business, moving in with a girlfriend. I don't know. I'm just going to retreat to my poker tournament. World Series of Poker's in Milwaukee next week. That's my refuge. So we'll do that. As far as the investing goes forward, I tell you what, I think we got this market nailed right now. We've done pretty well this year. Haven't made everything back from the end of last year, mainly because I want to keep the risk reined in. There will be some good pitches, and that big gain that we made on the volatility a while back, we'll get another chance at that. We'll get a chance to buy our A-list stocks cheap, and in the meantime, you buy Invesco. Invesco is a great proxy for the ETF industry, and they pay that fat 7% dividend. It looks like they've hit their bottom. That's the if you stuck around for the after the credits. I remind people I think you need to get into Invesco. I think that this one has. I think it's there. This is it. Look at that. It's ready. It's ready to go back up. All right. Have a great weekend, folks.